This is a broad-based tax cut that applies to individuals and small businesses. So it's a tax cut which cuts the income tax rates from 6% down to 5.5%, and it's phased in over a 5-year period. In addition to that, we have what's called a pass-through tax cut, which provides a deduction for small businesses that are formed as LLCs, S corps, or sole proprietorships, and that's a 25% tax cut, state income tax cut for those types of small business entities. So it's great because small businesses really form the backbone of our economy. They employ more people than bigger C corps do in the state, and so when you think about farmers and small businesses on main streets across the state, professional services, all those types of small businesses will get a 25% state income tax cut. The best economic development tools are those that they're fair, they're broad-based, they apply to everybody equally, and they don't pick winners and losers. So what's great about broad-based tax relief, particularly those focused on small businesses, are that each business can take advantage of it on a level playing field with every other business, where you don't have the government deciding, I want this industry, or I want this industry, or I want this industry. If you're a small business, you get the tax break, and then we let the business owners decide and make the decisions and the risks with their business on how they're going to proceed and be successful or not be successful. And that's really what government needs to do, is provide a favorable tax environment and then get out of the way. It's absolutely no threat to education funding. How much in education dollars do we get if a business leaves this state and goes to another state? We get $0. Or if a business decides not to expand in this state, there's no new dollars available for education. And so when we provide tax cuts where businesses can grow, they hire more people, they spend more money in our economy, and when more money is spent in our economy, there's more money available for education and other vital services. Now in the short term, what we've done is we built protections, or so-called triggers, into this tax bill. So the tax bill only takes effect when general revenue goes up over where it is today. So if our general revenue is here today, it's future growth, some of it which will be rolled back into education and other state services, but some of that future growth will be given back to the taxpayers who earned the money and who pay the taxes to be able to make investment decisions on how to best spend the money. I mean, we believe that the taxpayers know how to spend a dollar better than the government does. We have the opportunity to override the governor during this session. So the governor will not be given the opportunity to be able to travel around the state for 3 months misrepresenting what's in the tax bill and the effect that it's going to have on Missouri's economy. The reality is lower taxes are better for the economy. Lower taxes attract investment. Lower taxes create jobs. All the House Republican caucus voted for this bill. So first, call and thank your state representative for supporting a positive, lower tax environment for Missouri. Second, I would call the governor's office and tell them you want tax relief. Tax relief is important. Tax policy does matter on the investment decisions that businesses make. Take Boeing, for example. We were called into special session last break for tax breaks for a company because tax breaks drove that company's future investment decisions. Those same principles apply for small businesses as it applies for large businesses. So I would thank those who support it, and for those who haven't supported up to this point, call them and give them the courage to support real tax cuts.